Hey everybody, it's Will at VIP Mortgage. It's time for your local lender update. Rates have been improving over the last week. We are seeing some good momentum that's taking us back to the best pricing we've seen in 3 years, which happened on January 9th. And we have reason to believe that the market may have momentum to carry on past that and give us a little bit more improvement. Now, the last few times we've seen new lows on mortgage rates, it's only lasted for a couple of days. And then it kind of shrinks back down to the previous range after that. So I don't know if we're going to sustain it this time, but the jobs data keeps coming in weaker than the market really expects. Inflation last week looked really good. It was lower than market expectations. This week is another inflation report, and that one is the Fed's favorite, so it probably will have a bigger impact on the market than last week's did. And those expectations are that reading is going to hold steady. If we beat that, that may give us enough momentum to see that a little bit more improvement. I've been saying I think the first quarter we are probably going to stay relatively close to where rates have been so far this year, and then after that all bets are off, meaning rates could go up or down. I would lean slightly towards slow improvement over 2026 for the year, but if you've got folks that are hanging on, they're looking for a half a point or more in rate improvement. The thing to know is that historically rates just don't move that fast very often. They do, but it's pretty rare. And for rates to improve another half a point by the end of the year would be a little more than we would expect. That being said, we could see more improvement than that. But another part of that context is that if they do improve a half a point or even more, we would expect within a month or two of that happening that home prices are going to start to climb. So when you're looking at an overall value, if you take into account current rates and current home prices, it's a pretty good time to take a look and see what you can get. And if rates do come down later this year significantly, half a point or more, of course those clients can just get a refinance and then they bought the house before the prices went up. That being said, if it's better for them to wait, I would say that we could encourage them that things are looking better in 2026 as far as rates go than they have for the last 3 years. So that's good news. If there's anything I can do for you, give me a call, 719-232-7553.